Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, March 27th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you have here is a bounce that occurred yesterday. Very strong overnight bounce, kind of a pullback, and then a continuation here by late day, closing at the highs of the session or near the highs. And in here we're pulling back. So a pretty decent bounce, a recovery back above the previous pivot low. But after dipping so far down and pulling back here, we're now retesting a dropping 8-period average here from below. We're also retesting the bottom of the pivot range from below. Only a few more days in the week here until we shift the page to April and use the next pivot range, but for right now continues to remain resistance. And so obviously we have to see how this thing plays out off this zone right here, because any rejection back down could lead to a move down to the lower edge and a retest of 25.29 and perhaps prices below that zone. Again, this is going to be the key level to watch. This is what I mentioned before. That level right there, basically the 26.47s, price is back above that zone. So if price pulls back to 26.47s, that's an opportunity for bulls to defend and seal that low. So basically, if price pulls back to that point, bulls are going to want to keep that edge, bid for a return to the FOMC. Remember, that was the idea this entire time. If price takes it off and we drop, whenever we find rejection, that's when we'll come back to the level. And so right now we've done a great job of coming almost halfway there or so, and coming back to seal that 26.47 could be a great opportunity to buy and return it higher. But again, failure to hold that level could lead to a move right here to this 25.29 to 2500 zone. And again, that 8-period average could begin to be the resistance level that leads to that type of move. So again, keep an eye on that zone right there, and also the 26.47 for the ES. If we take a look at the NQ, this one has had a nice bounce as well, back above 66.53, back above the 66.46 low. Very, very powerful move, almost all the way back to the FOMC key level, which is 69.17. So a very solid move already out of the NQ Tech, with a big time reversal across the board yesterday, and there's lots of opportunities and a lot of big tech names right now on this pullback. So we've had a decent pullback in a lot of these, and tech looking to recover now. So again, if we do pull back from these highs here, any pullback to about 66.47, even as low as that 46, could still be an opportunity to defend and take it higher, perhaps even back up toward recent highs of 7,200. So we'll see if we get much of a pullback here. That could provide a nice continuation to the FOMC key level and beyond. Failure to hold the 66.53 again opens the door to perhaps dropping to the lower portion of the range, which is 62.60. Here's crude oil. I always mention to our trading room that after you get a great move right to your target, that's, right after that is when at times it becomes the most difficult or most dangerous to get into a trade. So after you get a great move as you expected, for example, after on this breakout day right here, after that day we were looking for the pullback, the morning pullback, to defend and keep prices above 62s for a shot at seeing a move to this target right here. And if we got that target, then raising it to this target. We got both of those. And so that was a solid move. Very, very clear price action. Market structure maintained the entire way. Just very, very nice. Now, however, we're at this edge. We saw some profit taking. We're seeing a little bit of selling pressure come in off that edge. That could provide at some point a return back to the center of this key range here, which would be 62.18. So at some point down the line here, perhaps in the next 5 to 7 days, we could be looking at 62.18. Now again, that's going to depend on how price continues to behave at this upper level. It could trade up here for 3 or 4 days before it drops. It could drop a little bit, then pull back and do a high failure or a lower high, very similar to what we saw over here, dropping away, pulling back, lower high before it drops. So we're going to watch for signs of rejection. I'm going to let it build out and be patient in allowing this to define its own rejection point, and then from there we could be looking at a great fade opportunity back to this area. Obviously we have broken out of this range to the upside, and so with this energy here we could see more upside behavior. That's why I'm going to let this continue to build out, because if price were to basically push back above 66s, you will likely start to see this thing eat through those highs and continue to push higher. So again, this is a developing situation up here, but at any time you're at an edge, you're always at the major pivot that needs to be watched, because at that point it's the decision point. It either needs to bounce and return back down, or it needs to push higher and continue in an upward price discovery phase. So we'll keep an eye on that one. All right, taking a look real quick at gold here. You can see in gold what a rally. This was significant squeeze. Really trapped the bears down here. I mentioned that we were really close to getting a big time break, but we had to start seeing a push through 1305. We never saw it. Instead, we actually just formed a very narrow range, 3-day range at these lows. And it was at that point where those late sellers became trapped. The buy stops came out above the previous month's close, and a big stop run day ensued. And the next day was a nice defense opportunity on the pullback here, right there, and that was a major liftoff. And this thing has now hit the upper end of the range, which is 1362.40. So that is it. We've now hit a high today. We've already returned and are bouncing off that level to the downside. This could be day one rejection like this day, or like this day, that eventually leads price back down to that lower area that we've been targeting this entire time, which is 1305 to 1310. So again, this could be day one of a potential move back across the range to 1305 to 1310. This has been a great price distribution here, and price continues to trade off of these edges very nicely, respecting them. You can see today again hit it perfectly, went 2 ticks beyond it, rejected, and is now pushing back down. So again, this could be a pretty significant downtrending day. The next session, any pullback could be an opportunity to sell it for a continuation downward. So right now it looks like we have hit day one rejection, and we could be looking at a pushback toward recent lows. Lastly, let's take a look at Bitcoin here. Bitcoin not able to get back above 9K. That is not good for the bulls. It appears that we could be looking at new lows ahead, perhaps a retest of 6,700, and perhaps a push below those recent lows of 58.80. So again, this is going to be very important here. We have not been able to catch a lasting bid in Bitcoin ever since the futures came online. This was about the biggest rally we've had, which was a significant rally. We had the lines lined up. We knew exactly where this thing was likely headed, and we knew the structure that was developing. But it broke down when it failed to hold 9K right in this zone right here. It broke down, and it's now really struggling, attempting to push higher. So this appears poised for a downside push. Again, the downside level down here is 58.80, but we have a major expansion target at 2100. That's the next major key level down. This is the 50% expansion target from this 11.3 edge. This is the 100% expansion target. Do we start a major drop back toward 2100? We'll see what happens here, but again, if price can't keep above this rejection day mid, we could be looking at further downside price discovery. So this is going to be very important. This is the previous month's low right here. We only have a few more days left. That could be an easy test here by the end of the month, and then we switch and flip the calendar to April with new pivots that we'll be watching and trading off of. So right now appears poised for more downside, especially as long as price remains below 9K. 9K above that level would open up a return back toward 11K, but right now remaining below that zone suggests that we could be looking at a retest of recent lows. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.